Okay, now is number 5 from paper May-June 2017, paper 11. It's about limited companies. Okay. JW Limited extracted the following balances from its book of account on 30 April 2017. Whoops. JW Limited extracted the following balances from its books of account on 30 April 2017 after the gross profit had been calculated. Now, you are required to do trial balance. This trial balance, in this list, you have to differentiate which one goes for credit, which one goes for debit side. Gross profit, since it is an income, so it goes to the credit side. Distribution cost is expense, goes to debit side. Expense debit. Dividend is debit. Debenture interest also expense debit. Ordinary shares is capital, so it goes to credit. General reserve credit, as it is a reserve in the capital part. Retained earnings, same like general reserve. Equipment at cost is asset, so it's a debit. Provision is credit. Inventory is debit. Trade receivables is debit. Bank is credit, it's given. Trade payables credit. Debentures is liability, also credit. Then next we will fill out this trial balance with the amount above, and start from gross profit. It's 63,000. Distribution cost is 24,000, and then 16,000, 6,000, 3,000, 100,000, 50,000, and then 23,700. Oops, sorry. 260, and then 65,000, and then 33,000, and then 14,000, and then 6,800, and then 17,500, and then 30,000. Then now the total debit side and the total credit side must be the same. If you calculate, total debit side would be 356. It has to be equal also in the credit side by 3,500 and 300 and 500, 356,000. So you can fill in this retained earnings, this one, retained earnings, as the balancing figure, which is 23,700. Then calculate profit for the year. We know that to find profit is gross profit minus expenses. Now, you already given with the gross profit above, and the amount of gross profit is 63,000 minus with expenses. First of all, you have depreciation expenses of 13,000. That's your expense. And then in the list of trial balance, there is a distribution cost, which is 24,000. And then there is an administrative expenses for 16,000. And then you have debenture interest of 3,000. And then what else? That's it, yeah. Only 4. Again, 13 is depreciation, 24 is distribution, 16 is administrative, and this one is interest. Yep. So your net profit is 7,000 after we calculate all the numbers, yeah. Then next, how to do this statement of changes in equity. First of all, it said to the director, transfer $10,000 to general reserve. Remember this because it will be needed in the statement of changes in equity. Now, at first, we have 1st of May 2016 given in the questions above. Look at your share capital. Share capital here represent ordinary shares. And then general reserve and then retained earning. Let's check above that you have 100, 50,000 and 23,700. Okay, copy paste all of these numbers to your statement of changes in equity. Share capital is 100,000 and then general reserve is 50,000 and then 23,700 and the total is 173,700. And then next, reserve, transfer to general reserve. Transfer to general reserve, it will decreasing your retained earning and adding your general reserve. So how to do that? The amount is 10,000, so it will add it to reserve of general reserve, and then in retained earnings minus 10,000, total 0. And then in statement of changes equity, net profit is also calculated. This net profit will increasing retained earnings, and your profit before is 7,000. From this, yeah, from answer B. So total is 7,000. After net profit, dividend. Your dividend paid is 6,000. Your dividend is taken from retained earnings. So 6,000 and then 6,000. Then next, total vertically 60,000, 14,700, 174,700. Then next, ROCE, calculate 2 decimal places of the return on capital employed for the year ended 30 April 2017. Use closing capital employed. Okay. Capital employed has 2 formula. Capital employed, either NCA plus CA minus CL, or capital or equity plus with NCL. Now, in this case, I'm going to use the second one, this one, because we already have capital or equity. This is your equity. And then we only have to find your non-current liabilities. And these questions, your non-current liabilities is this one, NCL, debentures, because it said repayable 2025. It's more than 1 year. So it considered as non-current liabilities. Okay, continue. So my capital employed is 174,700 plus with NCL of debentures is 30,000. Your capital employed is now 204,700. Now we calculate ROCE. ROCE is profit divided with capital employed times 100%. So 7,000 divided with 204,700 times 100%. It is equal to 3.42%. That's the answer. Suggest the reasons why JW Limited's return on capital employed is lower than the industry average. So our ROCE apparently below than other company. Yeah, there are many reasons actually, but the first reason that comes up in my mind is that JW's profit is lower than industry average. Second, probably because capital, because we are talking about capital employed. If the profit is lesser than the others, so it relates to efficiency in the company. So we can say that capital employed used or not used efficiently. Then you can think of any other reasons that logically will increasing NP and decreasing CE. You can think of any ways. Next, suggest 3 ways in which JW Limited could increase its return on capital employed. First of all, if I want to make a profit increase, I will increase my selling price. Increase selling price, so that hopefully it will increase the profit and it will increase in the ROCE eventually. Next, reduce my expense. If expense reduce, profit increase. And then I'm thinking of reducing long-term liability, because if long-term liabilities decrease, your capital employed decrease. So profit, let's say profit stays. If net profit stays but capital employed decrease overall, if decrease overall, your ROCE will be increased.